market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. SK Hynix shares tumbled by the most on record in Seoul after making its US debut, but positive news for TSMC, with sales there jumping by 36%. Oil spikes and government bonds fall as the US and Iran exchange new strikes, with both sides claiming control over the Strait of Hormuz. And Moscow faced a second day of large-scale drone attacks from Kyiv. Ukraine's President Volodymyr Zelenskyy overhauls his government, including changing the Prime Minister. So it is risk-off across these markets. The negative impulse coming through from the tech trade with that record drop for SK Hynix. US futures negative on the back of that. NASDAQ 100 futures lower. But you're seeing some negativity in Europe as well. Oil prices higher, yields up, bonds selling off. It is risk-off, as I said. US futures pointing lower by 0.4 on the S&P E-minis. NASDAQ 100 futures, as I mentioned, down 362 points right now. Brent spiking 3.4% after a 5% gain for oil prices last week. Gold under pressure on expectations that maybe the Fed will have to hike rates faster than expected, above 4,000, but down 1.3% in the session today. Let's take a look at the European markets map as well, briefly to check in. You did actually start the session with the FTSE 100 in positive territory, with energy as a sector playing that role. The FTSE 100, though, right now here in the UK is just down 0.1%. You're down a similar amount for the CAC 40 over in France. The DAX is actually flat. Similar picture for FTSE MIB as well. Let's get you a print right now on pre-market pricing for SK Hynix ADRs. After that 11-12% gain by the close on Friday, after that successful IPO, right now the ADRs are pointed lower by 8.5%, again after a torrid session for the SK Hynix in the Seoul session with a record drop of 16%. So that had not, of course, augured well for the opening of the ADRs on Monday. And you're seeing that picture then, currently down 8.5%. Not looking to wipe out all of the gains from Friday, but closing in on that. We'll continue to monitor that for you. On a positive part of the story when it comes to the AI story, though, TSMC reporting a rise in quarterly sales of 36%, meeting high expectations and signalling that global demand for AI hardware remains intact. It comes as the Kospi slumped 9% today, driven by that record plunge for SK Hynix after the memory chip maker's highly anticipated US trading debut. Let's bring in Bloomberg senior strategist Neil Camping right now for the details. Neil, before we get to SK, let's start on TSMC. Just for the month of June, am I right in thinking sales were up more than 60% just in a single month? Is TSMC validating the AI trade at this point?
Morning, Todd. Clearly, with regards to being NVIDIA's key chip provider, then it's no surprise to see TSMC sales continuing to be very robust. The June data was strong. It was in line with expectations because analysts have been taking up estimates in recent weeks. The biggest thing now for TSMC itself and for the AI narrative will actually come on Thursday, when we get the actual full list of results in terms of profitability, margins, and crucially, the guidance. Then we'll get a sense of where we're guiding to for the back end of the year, and also in terms of what their CapEx requirements and expectations are.
Neil, it's interesting on TSMC, so we'll get more details through this week. But yes, they are the key producer, as you say, for not just NVIDIA chips, but Apple as well, with those absolutely key foundations in terms of the factories, I should say, in terms of the build-out and what they have in not just in Taiwan, but they're building out aggressively as well, the foundries in the US. We've lost the line with Neil. We get him back, of course, because we want to understand what is happening with SK Hynix. There was some debate as to whether or not the pressure that was on the stock in Seoul today was down to profit-taking, maybe funds moving into the ADRs in the US. It doesn't seem to be that there is a structural reason for for the pressure that we've seen on SK and the maker of those memory chips, of course, today, it may be a question of profit taking. But we'll get Neil back, hopefully re-establish that line and get some context and some details as to why that stock in particular has been under so much pressure. And again, pre-market called lower as well in the US. Let's get to the oil story. Oil prices jumping this morning as the US and Iran trade fresh attacks, and the rhetoric is coming through from both sides as well. US Central Command says forces hit dozens of targets in the fourth strike by the country in around a week. The latest escalation came after Iran reportedly fired again at commercial ships in the Strait of Hormuz, as both sides issue conflicting statements over whether the passage is open to shipping. Let's bring in Abi Abu Omar, who's Bloomberg Horizon's Middle East and Africa anchor. Abi has been following all of this, of course, throughout the weekend and today. What do we know about the latest spate of attacks, Abi?
Good morning, Tom. So perhaps I could start with a new development that has happened since we last spoke, and that is through the Ministry of Foreign Affairs in Iran, through the ministry spokesperson Ismail Baqai, saying that the MOU between the United States and Iran in its current state is now in crisis. This is what he said. And he also said that the ships that are crossing the Strait of Hormuz through the parallel U.S. lines are prone to getting attacked. And so this has happened just moments ago. Iran also saying that it's not going to allow the IAEA to enter its nuclear facilities. So we're seeing an escalation in the rhetoric by the second. And this follows a weekend of events as well. Tit-for-tat attacks that have happened between the United States and Iran. Iran starting this off at the beginning of last week, Tom, by hitting an LNG-laden ship in the Strait of Hormuz, flagged to Qatar. The U.S. in turn attacking Iran for 2 straight days. And then over the weekend, Iran hit yet another ship flagged to Cyprus this time. The U.S. continuing the attacks on southern provinces, including Bushehr in Iran, and some military sites. Iran doing what it did over the past few months when these attacks happened, retaliating on countries in the region, hitting the likes of Jordan, Qatar, and Kuwait. We reported earlier some infrastructure damage in one of Kuwait's oil facilities. In Qatar, also saying yesterday that 3 people were injured. And let's just remember that up until a week or so ago, Tom, Qatar was one of the mediating sides in all of this. So it looks like the retaliation is happening, bearing no mind to those that were involved in resoluting the conflict between Iran and the United States. And of course, at the heart of all of this is the movement in the Strait of Hormuz that up until the early hours of this morning seems to be at a standstill.
Give us more details a bit in terms of what is actually happening, what traffic we are seeing, if any, through the strait. There's the transponders on, there's when they switch them off. So I know there's that complexity. But what is our current best understanding of the flow through the strait?
Yeah, so we're monitoring the situation. Our energy teams are tanker tracking those movements through the Strait of Hormuz yesterday. So over on Sunday, we reported that about 6 ships have made their way through the Strait of Hormuz with their transponders off, as you have mentioned. So essentially what we call turning their lights off to be able to cross the waterway. This morning, however, it seems that the traffic has gone down to a standstill, something that we've reported has been happening over the past few weeks or so. But Tom, even before all of this started happening, since the MOU was signed and, you know, those positive remarks about the traffic coming back to the Strait of Hormuz, as you can see on the chart there, it still nowhere was at the levels that we had pre-war. And so ship owners were treading with a little bit more caution because of Iran's assertion of dominance over the Strait of Hormuz, because of Iran saying that even though the MOU was signed and the Strait of Hormuz was supposed to be open, ships that are passing through had to stick to routes that Iran had laid out. And those that did not stick to those routes, those that were crossing the part of the strait that was closer to the Omani side or the southern part of the strait, were prone to getting attacked. This is what we saw happening over the past week or so. And so we already had been seeing ships treading with a lot of caution. But as of this morning, it seems that ship owners are holding still, deciding not to go through because the risk is just really severe. We still await whether those technical negotiations between Iran and the United States will actually happen. But for now, a lot of unclarity regarding the situation.
OK, Bloomberg's Abi Abu Omar with that important update out of the region. Abi, thank you. Let's bring in at this point Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, how concerned should we be right now about this flare-up? There's been an expectation, almost consensus from investors and guests that we've been speaking to, that we're kind of past the worst when it comes to Iran. We can look at other factors now. Do we rethink those assumptions? We've seen this surprising resilience for the global economy. Does it get challenged in an environment where maybe oil is around 80, 85 for a longer period of time?
Well, so I don't know if we can necessarily challenge the idea that we're past the worst point. I think this is still looking a little bit better than we were, 6 weeks ago. But it certainly does challenge that perspective that we'll be looking at $70 a barrel through to the end of the year. And you're almost retracing some of the concerns that we had earlier in the year. Now, the big concern is, of course, what the implication is to inflation, second-round effects, and therefore how the Fed is going to respond. Now, of course, tomorrow we have the CPI data, which is going to be really key. But actually, we won't really see any evidence for a couple of months. So I think the debate around what the Fed is going to do and how they're going to respond, particularly considering that we have a new Fed chair that we're not very familiar with, I think just adds a lot of volatility into the market at this point.
So how important are those comments from Kevin Warsh later this week?
They're really important, but I don't know if we're necessarily going to understand or, see anything else that he hasn't already said in terms of not committing to any forward guidance. And that tells us that uncertainty is likely to linger. It may well go through to Jackson Hole. I think that's a new kind of key date that we're looking to have a better understanding of how the Fed is going to be responding. But of course, we're heading into earnings season, and when you have this renewed inflation concerns and how the Fed is going to respond, it means that the importance of that earnings season really coming through and delivering has just been raised quite significantly.
So I want to get your take on the earnings season, but before we get there, so market's pricing at about 30 basis points of hikes from the Fed. Does that seem reasonable in the current environment? Are you basing your assumptions on that level of interest rate hike coming through from the Fed, or are you calculating, is your base case somewhere else?
So we're expecting no hikes through the rest of this year. Now, that is based on the idea that inflation is likely to peak fairly soon and start heading down, and because inflation expectations have been anchored to this point. But of course, we have to acknowledge, particularly given what's been happening in the last few days with the US and Iran, that the risks around that are very, very heightened. So the odds of a hike are clearly much, much greater than the odds of a cut. So I wouldn't say that we're particularly wedded to that forecast, and it's something that we have to watch and see how that pans out. The market has fluctuated a lot between how much, they're going to price in any hikes this year. For now, we're sticking to no move, but that is definitely under challenge.
On earnings, is it still all about AI and whether that gets confirmed?
I think that's definitely the predominant focus, and we have to make sure that, demand is not waning. That would really start to be a significant challenge, not just for the specific tech stocks, for the broader market as well. But the other thing that we did see last quarter was this broadening out in earnings growth, which was a really, really positive take on how the economy was responding, the resilience of the economy.
Europe was part of that.
Europe was certainly part of that, and actually we have seen some really good news coming through. The problem for Europe specifically, though, is that vulnerability, the greater vulnerability to the US-Iran conflict. And so for Europe, the earnings growth factor is very important, and almost the hurdle has been increased. So it's important for everyone, but particularly for Europe, I think, coming into the earnings season with the increase in tensions.
Is there a margin concern for Europe then on the back of that oil price story? Or do you see margins holding up? The earnings forecasts, do you align with? Are they looking a little punchy, or are you comfortable with where the forecasts are for European earnings?
I mean, they are quite punchy, and I'd say that that's actually the case globally.
Yeah.
And specifically with regards to margins, that is one of the key things that we're going to be looking out for, particularly with regards to guidance. How are they talking about margin pressures? Are we starting to see them peak, given the increase in input pressures? So I think there's a lot to be discussed, or at least to be seen, in this earnings season for Europe and broadly for the rest of the world too.
When do higher yields become a problem for the equity markets? Do you expect a further sell-off for the bond markets?
We are expecting yields to rise a little bit further. We're not expecting them suddenly to come down. Even if the Fed doesn't hike any further, we're expecting a little bit of upward pressure. In terms of how the equity market can digest it, it really comes down to the strength of the economy. If the macro backdrop stays really resilient, constructive, which itself comes back down to the AI capex story, then actually slightly higher yields is okay. It's when you start to push the 480 of course, towards the 5% mark that we do start to get some concerns. But at least at this stage, where yields are, we do think that it's not a headache for equities.
We had a previous guest on the Open Trade saying that they were avoiding investment-grade credit because of how tight the spreads are, not being rewarded for the risk. How are you thinking about credit and about that tightness that we're seeing in spreads?
Look, I mean, the tightness of spreads is really interesting because it does show us that actually credit has been incredibly resilient. You know, equities have gone up and down, but actually credit has outperformed from that regard. From here, you're right, that the return isn't that compelling. And I think that from our perspective, given that we're not expecting growth to really weaken over the coming quarters, given that defaults actually seem like they're heading down, that this is probably the time that you can even move into high yield, keeping in mind that the quality in high yield is much, much higher than it was previously. So there is opportunity within the credit space, but if you're looking at a broader asset allocation portfolio, we do think actually moving, have a greater allocation to equities does still make sense, and keeping in mind that you need to have exposure to real assets in this environment where inflation is still a concern.
OK, this is quite a constructive view with important caveats that you've laid out for us. I'm wondering if what your preferred hedge is in an environment where things are looking a bit more negative. Where would you look for safety?
That's a really good story. I mean, look, diversification has been the key story throughout the last 2 years or so. Increasingly, look, it's about resilience, but it's also about trying to access those multiple layers of strength that do exist, created by the AI capex drive. But there is vulnerability within that trade. So Europe and China continue to be a good one in terms of if you're trying to diversify away from AI. The geopolitical conflict, of course, means that it puts a bit of a shadow on Europe. So we are thinking more about China, but also look across at the other sectors that exist beyond AI. So we're thinking about financials. Healthcare, of course, is a good one. And then in this inflationary dynamic, again, you have to look towards real assets. So that's still commodities, a really good play at this kind of time when we're still concerned about the geopolitical conflict.
OK, and we're seeing at least parts of the commodities trade playing that role today. Seema, thank you very much indeed for those insights on these markets. Seema Shah, Chief Global Strategist at Principal Asset Management. Coming up, a political reshuffle in Kyiv and the loss of a key Trump whisperer in Washington. We bring you the latest on the Russian invasion of Ukraine next. This is Bloomberg. This is The Pulse. I'm Tom Mackenzie in London. Now, Ukraine is expected to be top of the agenda as meetings of both EU foreign affairs ministers and leaders of the so-called coalition of the willing countries are due to take place today. The gatherings come as Ukrainian President Volodymyr Zelenskyy removed the nation's prime minister as part of a shift in political strategy in the run-up to another winter under threat of Russian attacks. For more, let's bring in our chief Europe correspondent, Oliver Crook, who has the details. Ollie, let's start with the gatherings today. What is going to be top of the in-tray for leaders? What is going to be discussed with the most urgency in these meetings?
Yeah, Tom, two big meetings today. The first is here in Brussels, where foreign affairs ministers have gathered to discuss a number of different issues. Obviously, Ukraine's going to be top of the agenda. They'll also be talking about possible sanctions on Israel in terms of their activity in Gaza and the West Bank, though there's a chance that they'll probably delay that given ahead of the election in Israel. But of course, for Ukraine, particularly at this meeting in Brussels, and then there's that coalition of the leaders meeting hosted by Emmanuel Macron over in France. I think in both of these meetings, the thing that you will find in common is going to be a sort of strategy session for the Europeans now that there has been a pretty radical shift in tone from the U.S. administration and Donald Trump himself following those meetings last week in NATO with a number of European leaders. But of course, the one-on-one with Volodymyr Zelenskyy and President Trump, in which you saw really, I think, the warmest relationship you've seen between these two men. Obviously, Zelenskyy has gone to great lengths to get himself back in the good books of Donald Trump and has been, having some success with that occasionally. But really, you sort of heard the most positive pronouncements from the President of the United States with Zelenskyy last week. We also had the United States granting Ukraine licenses to produce local Patriot systems, which is something that's absolutely fundamental for them. But for the meetings here for the Europeans, what they'll also be discussing is the 21st sanction package against the Russians. We doubtful to get an outcome on that this week, but it's something that they may be looking at getting into effect next week. But of course, for the coalition of the willing, it's some of that architecture, right, Tom, for those discussions about what the day after looks like in Ukraine, what Europe's role is in guarding security, but of course potentially getting some more of those air defense systems that the Ukrainians so desperately need. So we'll be watching both of these meetings very closely. We'll hear from Kaja Kallas a little later once the meeting here wraps, and keeping an eye out for Emmanuel Macron as well.
OK, so the French president will be on the ground and you'll be watching for any progress on that question. And Ollie, meanwhile, I know you've been across this as well. The domestic politics of Ukraine obviously having international implications. What is happening when it comes to the new PM, or at least the proposal for the new premier role in Ukraine? What's behind this move?
Yeah, absolutely. I mean, you get these reshuffles every now and then from President Zelenskyy when you look at sort of the cabinet and the prime minister. The prime minister now stepping down and going to be replaced. She may become ambassador to the United States. There's some reporting around that. But of course, Zelenskyy does this every now and then. And this is really girding, looking at the possible candidates that would replace her for the winter and keeping the lights on in Ukraine, which is, of course, the fundamental question with the Russians, particularly last winter, really stepping up all the attacks on infrastructure. There's two main candidates. One is the CEO of Naftogaz, which is the national natural gas company over in Ukraine, and his sort of track record of being able to actually keep the gas flowing, keep storages full, all of those sorts of things under extremely difficult circumstances, potentially tease him up nicely to think about the energy question next winter. But of course, the former Prime Minister, Denis Shmyhal, who has also served as energy minister across Ukraine. So both of these men potentially who would take over this role are both incredibly well versed on this question of energy. And of course, as the Ukrainians are gaining momentum on the battlefield, they're gaining support from Donald Trump, and of course they gain that critical loan from the Europeans, that 90 billion euros to keep them in the fight. Really thinking about what the sort of next steps are domestically, absolutely crucial for Zelenskyy as he enters. Obviously now is the summer, but again, another winter which could be again very, very difficult for the Ukrainians.
OK, bracing for another potentially tough winter for Ukraine. Bloomberg's chief Europe correspondent Oliver Crook. Ollie, thank you. Meanwhile, the death of Senator Lindsey Graham has left key US allies like Ukraine without one of their most effective conduits to the White House. The South Carolina senator died unexpectedly over the weekend at the age of 71. In the last 3 days before his death, he met Ukrainian President Volodymyr Zelenskyy and sealed an agreement with senators to advance a Russia sanctions bill. For more, let's bring in Bloomberg's Jill Deesis. Jill, just talk to us, give us the details around the sizable impact that Graham had in terms of pushing the need and the case for supporting Ukraine. He was a central and significant figure in the foreign affairs of the US.
Yes, that's right, Tom. And I mean, we just heard there from Oliver about the relationship between Zelenskyy and Trump and how that seems to have warmed recently. I mean, you have to imagine that when you have Senator Lindsey Graham, one of the most hawkish Republican senators in the United States, also just one of the ones that's been most insistent on the Ukraine issue. I mean, that's a huge loss in terms of that idea of being that sort of linchpin ally. I mean, again, his death, very shocking. He had just returned from a trip to Ukraine. It was actually his 10th trip to Ukraine since the war broke out in 2022. He had been at the NATO summit in Turkey just before then. So you do see, this really, really heavy involvement in these types of policies. I mean, again, Tom, it's really difficult to underscore or to overstate here. I mean, how important he's been for sort of shaping this type of foreign policy under the Trump administration. Trump is a man who, going into office was pledging to be a little bit more isolationist. Lindsey Graham is a massive interventionist, so he's really been pushing for U.S. involvement in these conflicts. I know, obviously, we'll have to see what ends up happening post this, but this is a pretty key ally who did have President Donald Trump's ear on a lot of these matters, and so it's hard to imagine that this isn't sort of shifted in some form in terms of how things actually look at U.S. policy going forward.
What does it mean for the domestic politics of the U.S.?
So, I mean, when it comes to replacing Lindsey Graham's Senate seat, it's in South Carolina. This is a very, very heavily conservative area. There was going to be an election later this year, still is, that Lindsey Graham would have been up for re-election for. Not particularly great odds for the Democratic candidate, but there is a little bit of shuffling going around just sort of on the Republican side. So the governor of South Carolina will be able to appoint somebody who can fill out the rest of Lindsey Graham's term. There will also be a special primary, Republican primary, that does sort of create the opportunity for some infighting within the Republican Party, depending on how that shakes out. So again, a little bit of uncertainty about what that ultimately looks like. I do have to point out that when it comes to domestic politics, Lindsey Graham also a big supporter of the Iran war, which of course has become more unpopular in the United States as energy prices remain elevated, gas prices remain elevated. So, interesting to see whether or not that builds into the equation here.
OK, Jill Desus, thank you very much. Coming up, we're going to shift focus. We're going to bring you the outlook for M&A for the rest of the year after a deals surge in the first half. That conversation is next. This is Bloomberg. Good morning. Happy Monday. Welcome to The Pulse. I'm Tom Mackenzie in London. These are your top stories. SK Hynix tumbles in US pre-market trade after shares fell by the most on record in Seoul. But positive news for TSMC, with sales at that company jumping by 36%. Moscow faced a second day of large-scale drone attacks from Kyiv. Ukraine's President Volodymyr Zelenskyy overhauls his government, including changing the prime minister. Plus, oil spikes and government bonds fall as the US and Iran exchange new strikes, with both sides claiming control of the Strait of Hormuz. Let's get more right now on that story and bring in our Middle East energy correspondent, Anthony De Paola. Anthony, where do things stand in terms of the conflict, in terms of the aggression, and what is actually flowing, if anything, through the Strait right now?
Good morning, Tom. Yeah, the way it stands is conflicting reports from both the U.S. side and the Iranian side. Iran claiming that Hormuz is closed to traffic, the U.S. saying it's open, saying repeatedly that it's open. There's that channel along the Omani coast that the U.S. is saying vessels are able to take. And so far, we are not seeing a huge amount of traffic in terms of vessels that we can see with their satellite trackers on. It does appear that there are some vessels that are going through without the satellite signals on, and that allows them to kind of sneak through the Strait of Hormuz, as it were. If they don't have those satellite signals on, they can't be seen by the regular radars. They're not transmitting, and oftentimes we understand these vessels are going overnight with the lights off, potentially with some military escorts to try to get through there. So those kind of voyages are continuing with vessels that are going dark, as it were. Whereas the flow of normal traffic through the Strait has really dried up, really since last week, when we saw those attacks on shipping, particularly on some vessels that were taking that Omani route. So that's dried up, and it's becoming really difficult for crude buyers, for traders, for shippers who want to go in to the Gulf and pick up some oil. It's becoming really hard for them to do that, and so we're just not seeing the availability of vessels willing to go into the Persian Gulf because of the risk of getting stuck there or even being attacked while trying to make the voyage. So that's really impacting the traffic going through the Strait, Tom.
OK, Anthony, with that update, thank you very much indeed. With Brent at $78 a barrel, up 2.6% in the session so far. Bloomberg's Anthony De Paola. Of course, the energy price story ties into what's happening with travel as well. But this is a different story when it comes to easyJet. Investors are awaiting an update from US investment fund Castlelake after Apollo's surprise £5.7 billion counter-offer, which, of course, came through last week. The battle between the two US funds stands out because the volatile, low-margin airline business rarely draws financial suitors. Let's get more with Bloomberg's European Equity Capital Markets reporter, Pablo Mayo-Sequeiro. Pablo, where do we stand on this story? And this is another example of possibly a publicly listed European company going private in the airline space. How close are we to a deal being actually closed? Two suitors. Where are we in this story?
Well, we'll have to see if there's a bidding war here. Clearly, it fits into a broader theme. There's been a growing number of UK-listed companies that have been taken private in the last few years, and that number just keeps growing and growing. I'm not sure that trend is going to slow down anytime soon. OK, and there's an IPO drought in London, at least. Is that what kind of opens the spigots, if anything? What opens the taps on IPOs in London? Is it a question of the LSE making additional changes? Is it a regulatory question, or is it a broader market sentiment story? It's a great question that a lot of people in the city are asking themselves. And clearly, you're putting your finger on the fact that there's a big gap between the number of companies that are being taken private versus the number of companies that are joining the stock market. The good news is that there is a decent pipeline of IPOs looking to come to London. The question is, when are these companies actually going to come to market, and what happens in the meantime, because these takeovers are not going anywhere. I think that the regulator has done a lot to make London more attractive for companies to list. The question now is around the availability of capital. Capital to invest in these IPOs and remain invested, so that valuations keep going up, and then potential buyers don't see the bargains that they're spotting right now in the market. The current Labour government has done a fair bit in terms of reforming pensions, but there's still a lot to get done, and obviously we have a new administration coming in, and we'll see what they do about it.
Okay, so the pipeline is there, but we need to see that pipeline actually being executed on. Pablo, thank you for that update, of course, in terms of what's happening, potentially with the IPO story in the UK. Pablo Mayo Sequeiro, who is our European Equity Capital Markets reporter. Let's start on the M&A story, or stay on the M&A story more broadly. It's been a bumper first half for global M&A as we think about easyJet. Of course, it hasn't crossed the line yet, but even before easyJet, it's been a pretty solid first half of the year for transactions. Values were up transaction values up about 30% year on year to $2.6 trillion between, that sounds like a lot, between January and June. That puts deal makers on course to potentially pass the record haul they achieved in 2021. Let's bring in right now Cassander Verwey, who is JPMorgan's head of mergers and acquisitions in EMEA. Cassander, good morning.
Good morning.
What is the current state of we kind of gave a bit of a snapshot there. Does that momentum continue into the second half, and what are the drivers?
Thanks for having me, Tom. No, look, I think there's a clear drive and a clear continuation of that trend that we've seen from the second half of last year all the way into this first half, and I think continuation into the second half. There's some structural drivers which sort of drive M&A in the short to medium term. One of them is the propensity to sort of take strategic action from large corporates. We've seen that already happen over the course of the last 6 months, with mega deals being up 250%. We saw 21 of them in Europe. We were fortunate enough to advise on 12 of those. The reality is there's a clear sort of bias to action in the corporate boardroom. That's not going to change. There's a strategic imperative to act. And sort of they need to counterweigh, I would say, the volatility in the markets and the volatility in the macroeconomic outlook with sort of that strategic imperative, and sort of there's a clear...
What is driving that strategic imperative?
It's a search for scale. So if you look at what the board is looking at in today's market environment, scale comes really at a premium. So if we look at valuations in the market, scale companies trade at around 40% on average premium to smaller and mid-cap companies. Scale drive benefits for growth, ability to invest in growth, higher margin, cash flow generation, and therefore scale is at a premium in today's market environment. And if you've seen all the mega deals that I just spoke about, and the volumes, which means that corporates are sort of fearing a little bit that they're sort of being left behind, and therefore there is an imperative to act.
With a particular lens on Europe, what are the challenges around cross-border consolidation right now?
Well, you just talked about sort of the UK, which is a clear example of where there's a lot of cross-border M&A. Cross-border M&A has seen a massive uptick over the last sort of 12 months. Yeah. Following Liberation Day, there's a massive surge of cross-border activity. A lot of that has been into the UK. There's a nuance to it, though. The UK is actually the second largest acquirer of companies globally. So the UK is actually, throwing quite a few punches in sort of the global M&A arena. Now, it's fair to say that the US is above that. The US is the biggest buyer and seller of assets, with a lot of focus on the UK, as I said. But it's clear that the UK is also there.
That's interesting. We don't talk about that side of the story quite as much, so it's interesting you bring that up. But let's bring you back to the other part of the story, which we do talk about, which is that move from public to private in the UK. Does that continue in the second half? Does the publicly listed stocks, for valuation reasons maybe, look attractive to US investors?
I think there's a valuation argument. Look, US companies trade at a premium to European companies. So that is a benefit when you want to do large-scale M&A, which is what we've seen in today's market environment. So clearly that is going to be the case in the second half as well, because the valuation differentials will not disappear. I think the reality, though, is that the UK will always be an attractive market from a public to private perspective. The UK is the largest market in Europe. It has great international companies. They're trading at a discount to US peers. It has the largest roster in Europe of large companies. So if other companies from outside of Europe are trying to look for scale, the UK is one of the first markets they look for.
Do you think the IPO pipeline opens up for the UK?
I think it's a challenge. I think the IPO pipeline is very much bifurcated towards what we call trophy assets. Those are companies that have secular growth trends, that have high margins, high cash flow generation, and are not impacted or actually are a beneficiary of AI. That's a small group. So there's only a small number of companies that sort of tick all those boxes in today's environment, and that's really the reality that we find ourselves in. But it does mean that the UK and other European companies, by the way, as well, who see public to privates, need to replenish those companies with high growth, innovative companies that grow through the cycle.
How are boards talking about a potential Burnham government and what that could do to deal making?
I think boards taking a longer-term view. I think what we've seen, if you bring it back to a broader macroeconomic environment, I don't think the UK is specific to that. Boards take a long-term view, and I think they look at long-term secular trends, what is driving our businesses. AI is clearly one of them, if we look at the scale point I made earlier. So I don't think that boards are saying, let's look at the government that's in place and now act on that, and let's drive M&A, yes or no. They take a much longer-term strategic view and therefore come back to that strategic imperative. Are we capable of doing the dream deal that we want to do in today's market environment? Balance sheets are actually quite healthy. Operating and earnings momentum is actually quite healthy. So that actually gives them license and allows them to do these bigger transactions. And I don't think the government in a country is necessarily going to drive that change in the short term of that thinking.
You talked about AI. I'm thinking about Schneider Electric recently doing a deal in that space. Yep. When we think about cross-border consolidation in Europe, then, which industry is kind of top of mind for you in terms of where we could see major deals coming through?
If you look at one of the growth drivers is AI, but AI is a big buzzword, and it talks about many industries. Of course, it's about compute, it's about storage, it's about data centers, right? That is a massive area of investment. There's $5 trillion of capex coming to the market in the next 5 years. But there's a whole roster of adjacent industries that are sitting next to that AI trend. Think about electrification, think about automation, robotics. So those are thermal management. So those are all sorts of areas where AI and the investments in AI and the capex in AI is creating a lot of side effects, if you will, that are going to drive sort of the trend and the growth. Now, as a company, if you're not in those industries or those adjacencies, you want to be in those adjacencies. So we see a lot of growth in those sectors. They tend to be industrials, they tend to be technological, and we see a convergence of industrials and technology to create those large corporates that, and the example you gave just now about Schneider is exactly on trend. It's creating a software platform within Schneider, which historically was a traditional DI company.
Are you getting the sense that Brussels is more accommodating to deals either within AI or within defence? Is there more? What is the signal? What signals are you getting from the regulators?
Yeah, look, I think around the regulatory sort of environment, both in the US as well as in Europe, both the CMA as well as European regulatory authorities, we've seen a more pragmatic stance towards antitrust in particular, which went from we say no to let's think about remedies. And therefore, as a board, when you think about doing a transaction, you want to know what the certainty is that you're going to get to the finish line. So that's helpful. That has limited the amount of time that people need to spend on things, and also the regulatory throughput and the lead time for it to close is different. However, there's a big but. In today's market environment, there is more focus on security, resiliency, and therefore in that context, the dynamic shifts from only antitrust more toward foreign direct investment regulations. And we haven't really, everybody's talking about national champions in Europe, but we haven't really seen those deals yet.
Okay, that's interesting. The banking space. I mean, I'm thinking obviously of UniCredit and Commerzbank, and you have to talk about individual names. But do we get banking consolidation? I mean, that is one example of where things are held up, arguably for domestic political reasons. Do we get more activity in banking? Is there more consolidation that can come through this?
The reality is FIC and banking as part of that, and insurance is already the second largest area of M&A activity. So the reality there is that we will continue to see that. What we've seen so far, though, is really transactions that are about economies of scale, and they tend to be more local. So we've seen that in Italy. We've just seen the Intesa transaction. We see that in Spain. We see that in other jurisdictions. One could actually argue about the Commerzbank situation. There's a big domestic German angle to that one as well. So you see that more on a national level, I would argue. The reality is that we haven't seen these cross-border M&A situations yet in banks across Europe, and that's because the regulatory framework is still not quite there.
Still not quite there for those cross-border banking deals. Cassander, thank you very much. Really interesting insights. Cassander Verwey, who is JPMorgan's head of mergers and acquisitions, M&A in EMEA. Now, to defence, and more details on the defence space. Europe's largest defence startup, Helsing, has completed a financing round at a valuation of $18 billion US. Helsing has gained prominence since Russia's invasion of Ukraine. Let's get more details and bring in Bloomberg's global defence editor, Jerry Doyle. Jerry, how significant is this latest funding round for Helsing?
It's quite significant just in terms of the dollar value. Obviously, 18 billion valuation is very high, but it also shows the seriousness of investing in the defense space even now. Goldman Sachs, JPMorgan, they're a big name pouring money into this space, and something that started out as a hot investment area after the full-scale Russian invasion of Ukraine in 2022 is now turned into an even larger space after the Iran war sort of showed the importance of a lot of the technology that defense startups are working on. Things like drones and drone defenses are now extremely hot areas.
Jerry, as we think about drones, we think about connectivity. It's so important, and clearly the Ukrainians are showing some strength there. But that relies on having satellites in space. Where does Europe stand? Europe has strength in the satellites in the satellite sector. I know you've been doing reporting on this. Is Europe positioned strongly enough when it comes to ensuring it can get satellites into space and maintain connectivity?
Yeah, I mean, Europe has some excellent technology companies. It has companies that can build these high-tech satellites that can do Earth observation, spy satellites. They can track fires. They can track things on the ground, radar, communications, all of these things Europe is able to manufacture for itself. The tricky thing is getting these objects into orbit. Right now, it relies on heavy lift for Arianespace, the Ariane 6, which can only launch, say, 10 times a year, 22,000 kilograms to orbit. That's a big number, but it can't do it very often. So for national security payloads, they really have to rely on a lot of foreign companies, most namely SpaceX. And Europe wants to get away from this in order to get more deeply into the defense space in orbit. Right now, that's a big challenge for them.
OK, Bloomberg's global defence editor, Jerry Doyle, with that update and that reporting as well. Jerry, thank you. Coming up, as Europe endures its third heat wave of the season, the World Health Organization warns extreme temperatures are a dress rehearsal for what's to come. More on that next. This is Bloomberg. Welcome back. This is The Pulse. I'm Tom Mackenzie in London. To UK politics then. Andy Burnham is reported to be considering unveiling a bolstered budget later this year. This as allies and experts seek to persuade him to pursue a land tax, public control of utilities and a more ambitious devolution strategy. Burnham is on course, of course, to take over from Keir Starmer as the UK Prime Minister next Monday. Let's get more with Matt Bunner, UK economist and Bloomberg with Bloomberg Economics. Matt, what more do we know about these ideas being kind of tossed around by Burnham's team, how real they are, and whether the Treasury is ready to kind of implement them?
So the bigger budget you referred to would be bringing forward the spending review that happens, which sets out departmental budgets for 3 years ahead. So essentially, this kind of measure would allow Burnham to really reset fiscal policy in quite a clear way and demarcate himself from Starmer. In terms of the specific policies, they are still shaping up, but one of them you mentioned is land tax. This is something which economists have been advocating for a long time. It is less distortionary than things like a stamp duty tax, for example, although it is complex to reform the property tax system, and that will take some time. fiscal devolution is another particular point that Burnham has advocated for in the past and has continued to do so in recent speeches. So fiscal devolution would basically allow the regions to have more power over tax and spend. So the UK is actually one of the most fiscally centralised nations compared to other G7 countries, for example. The idea being if you allow more power to the local regions, they can make better decisions for their area about how best to raise money and how best to spend it.
Matt, any other clues about other policies that are being worked out by Burnham? Do we believe him and the team when they say that they've been working on things for 12 months? I mean, is this a team that's going to come in and actually have policy ready to go?
I mean, this is a question that time will tell. I mean, certainly we are still trying to figure out the details. The policy platform is hazy at this point. What we can kind of glean is from recent public statements from people in his circle and policy papers that have been put out. So, I mean, we know one key thing he said he's going to stick to the fiscal rules that Rachel Reeves implemented, which will be some kind of which will appease bond markets. He's also said he's going to stick to Labor's manifesto commitments on tax, which kind of narrows the room that he has to make any major changes. What we do expect, I mean, all these policies we've just been speaking about are things which are going to get long-term growth going, or hope to get long-term growth going. But those kinds of policies usually have little short-term political payoff. So what we expect is that in the upcoming budget, it's quite likely Burnham would implement some kind of cost of living package, which would quite possibly be funded by something like a capital gains tax hike.
OK, Matt, thank you. We continue to watch, of course, and get any signals and monitor and assess any signals we're getting from Burnham's team in the lead-up, of course, to Monday. Matt Bunny from Bloomberg Economics, thank you. Meanwhile, this year's record-breaking heat in Central and Western Europe has already caused close to 10,000 deaths across the UK, France, Spain and Germany. That is according to research groups and government bodies, 10,000. In England and Wales alone, heat waves may have resulted in more than 2,700 deaths. That's according to an estimate by researchers at Imperial College London. The World Health Organization, the WHO, has warned that the extreme temperatures are a, quote, dress rehearsal for what's to come. Let's bring in Bloomberg climate and weather reporter Joe Verts. Joe, it's pretty terrifying in terms of the human toll that's already been taken as a result of these record high temperatures. Is this part of the new normal? Talk us through. Put this in context for us. These sound like huge numbers in terms of lives lost.
These are big numbers, and really these are early counts. I mean, I've talked to some health authorities and researchers, and they expect those numbers could climb even higher. And to the dress rehearsal line, we know that these heat waves are getting more intense and more frequent. And look, this summer they started early. We started seeing these heat waves in May. We saw, monthly records in May across UK, France, and then hit again in June, and again right now in July. We've had 3 of these in a row, and each of these heat waves, had their own toll. But the accumulation of that over time is really starting to wear. It's wearing down, any of the really all of the human systems that people rely on for their lives and livelihoods. We've had factories have to rotate workers off to because it was too hot. We've had just daily life be suspended. It's been too hot to do a tour of the Eiffel Tower in the afternoon at some of these places. And the 2,700 number out of the UK, that doesn't account for some of the deaths we're starting to see now from other artifacts of the heat, including the wildfires. We've had a big one in Spain. It's the deadliest in at least 5 years, one of the deadliest ever. 13 people died just in that event alone. So we're just in July now, and more hot weeks.
Starting earlier and going on for longer.
That's right.
And so the human toll is there. Talk to us about the infrastructure. But we are not built, our infrastructure is not built for these temperatures. What are you seeing when it comes to European and UK infrastructure?
Well, I mean, the infrastructure not built at a time where they were dealing with these types of temperatures and these types of extremes. Many homes here in the UK don't have air conditioning. 7% have built-in air conditioning here in the UK. A further like 8% are using these portable, air conditioning units, and you could stretch that out and look at the rail infrastructure. We've seen rail lines have to be suspended due to concerns about reliability and safety on these networks, all the way to power. We've had the UK grid operator warn several times about potential energy shortfalls, and in France, the nuclear plants have had to curtail output due to hot rivers.
Okay, Joe, thank you for that, an important update in terms of the climate damage. Bloomberg weather and climate reporter Joe Wirtz. There's a lot more coming up. Looking at European stocks currently flatlining. US futures down 0.3% on the S&P E-minis. Nasdaq 100 futures down a full 1%. Bloomberg Brief is next. This is Bloomberg.